Hello, hello. Welcome back to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. Price has been consolidating around 60,000 for the last few days after an all-time high breakout. We'll check out the price chart and hop around on-chain looking at the futures market and the spending and profit taking of our holder classes to see if there's any concerns in the data. We've seen a bit of profit taking in the last day or two, but on-chain still feels very quiet. If you're enjoying this content, make sure to give this video a thumbs up and subscribe to my channel. I want this to be the best place for Bitcoin and on-chain analysis on YouTube, and your support is the key. But enough about me, let's talk about Bitcoin. We'll first start off looking at the price chart. When we spoke on the 21st, the other day, we were right up here retesting the previous all-time high after a fresh breakout. We broke below that level, and we've spent the last few days building support. But over the weekend, we held 60,000. Here's 60 right here. In the last few hours, we've bounced away from it. Is the market ready to find new prices again? Hard to say here. But what we wouldn't want is for this to go too much lower than where it is now. Let me zoom out. Put these Fibonacci's on here. Okay, so 57,000 here has been our key level, the 786 that we watched for most of September and October before the breakout. We're now above this. This is the level we wouldn't want to go below for my comfort. Wouldn't want to see us back down here at 54 or 55 because it took us so long to break free from this level, especially after this rejection at the 702, and then we built support here for a few weeks in October. We want to see price moving away, trend moving away from these uncertain areas for price. Another thing I want to point out is just how choppy all-time high breakouts can be. So here is the daily chart for Bitcoin. We zoom in, I've made a fractal here of this previous all-time high breakout from last December, right? See, here was the all-time high in 2017. As we came up to meet it here, we got a bit of indecision. The price chopped around a bit before finally breaking free. If we put this fractal up here, we can see what's happening for us is not that dissimilar from previous all-time high breaks. There's often some chop, a bit of rejection before support is gathered, and we move away. We can also do this for the breakout in 2017. Here we are, we'll take this fractal. This was the 2017 breakout. It broke over the all-time high. It actually got clean above it. It broke down below. There was some zigzag here, some weakness where it gathered support over a period of maybe 2 or 3 weeks. And then there was a bounce back over the all-time high and off it went. This whole process took about 50 days, from the initial all-time high breakout in 2017 to the indecision and the final bounce before leaving. It was 50 days. We are now about 4 days into our all-time high break. The fractal doesn't exactly resemble 2017 or 2020 for that matter, but we have 2 previous breakouts, the 2 most recent in Bitcoin's history, that show us that there can be a period of time before we actually get loose of the old high and create new ones. So that's what's going on with the price chart right now. Not a lot to share or to look at. We're waiting for support to be reclaimed over here, and we can see on the hourly chart, this is the 4-hour chart, just in this morning, we've got a few strong candles here back over 62,000. Let's hop over to the derivatives and on-chain data and see how this matches up. This is futures open interest on the Chicago Mercantile Exchange, which is where the Bitcoin futures-based ETF went live last week. And look at the skyrocketing open interest just in the first week of activity for this ETF. Very impressive. There was a run up before the actual launch in anticipation that took us up to basically previous all-time highs. And in the last week, just skyrocketed. It's flattened out a bit up here at the top, but this is our new normal. This is the new normal for futures. High volume, lots of interest. Here's our futures dashboard that we looked at last time. At the top, we have open interest in the perpetual market. Here it is in USD terms, and here it is on the right in BTC terms. In USD terms, the value will change in these open contracts when the price changes, as they're both denominated in dollars. But even with that, we're at all-time highs in open interest contracts in USD terms. And in BTC terms, over here on the right, we are also near all-time highs. It's been a little flatter the last few few days as price has been uncertain, but still the actual level is very high. We know that a lot of interest in futures by itself is not an issue. Where this becomes concerning is when this is rising quickly and the funding rate is diverging from price. So let's look over here at the funding rate. Look at this spike. This was on October 21st when we broke the all-time high. I'm gonna zoom in. These are leveraged long traders opening contracts for the break of the all-time high. These are apes FOMOing into futures positions, expecting to get rich quickly. You can see the funding rate nearly triples, hangs out up here at a high level for a few days, but price loses momentum. And when you get enough leveraged long traders and price doesn't move in their favored direction, they quickly get flushed out. We follow our eyes over here. These are the liquidations. Let me match up these time frames on all three of these charts so you can see them. So when we broke the previous all-time high right here, price consolidated on the 20th of October here and the 19th, just under 64,000, kind of bouncing around. And when it finally broke and created a new all-time high, look at this spike just above my cursor here of short liquidations. This was someone who had a position expecting price to go down. They were wrong and they got squeezed out, and it helped push us over the all-time high. We get up there to new highs, the funding rate starts increasing. Long traders start stepping in with leverage. That's the only way you get this quick spike like this. They go leveraged long. They're waiting for more price action. Price diverges. It starts declining on high open interest and high funding. Price can't keep up. A few people start getting liquidated. Look over here at this chart. This is the long liquidations now. These are the traders who bet on price to go up and were wrong and had their positions automatically closed by the exchange. So we had a short liquidation on the way up, pushing us into the all-time high. Then on the way back down, after getting high funding, after a bunch of leveraged longs stepped in, they ended up being wrong, and some of them got liquidated. Look here, 10 million in this hour, 40 million in this hour. These people had their positions closed. Price came back down. Funding clears a bit as some of these leveraged longs are squeezed out. You see the funding rate reset back down a bit. Price goes sideways. A few more of these people are wrong. They close out their positions. They're not all liquidations. Some of these are just being closed out. But we get here to October 22nd, midday, and we get another liquidation right here. When this liquidation occurs, price falls. So this is the relationship between price and the funding rate. What we look for are divergences. This is a divergence. Price shoots up quickly and then it starts to show weakness, but funding is rising. This is a concern here when we see this. And what did we get? A bunch of liquidations. Even over here on a shorter time frame, even if we zoom in on this part here, price sideways and declining as the funding rate is increasing. This is a divergence, a smaller, gentler divergence, but a divergence nonetheless. Price showing weakness, long traders opening more positions. And what do we get? More long liquidations right over here. Price wasn't ready. There was a bit more weakness and all these guys got squeezed out. This is just the nature of doing business in the futures market. And you can see over here now on the short liquidations chart, as we've been bouncing back up over 62K, there's a few more short liquidations that are involved this morning. So this is the kind of back and forth between the funding rate changing with price and outcomes in liquidations for those traders. This has been occurring quite a bit in the last few days, and it's helped propel a lot of this choppy price action. This move here had a short liquidation that we see. This move down had a long liquidation. This move down had a long liquidation. Even this small blip here is over $10 million. That is a non-trivial sum to be liquidated. This has been predominantly where all the action has been the last few days, and it will remain an outsized factor as long as the on-chain demand volume is still on the lower side as it has been. This is the spent profit ratio of short-term holders. We've looked at this a couple of times on the channel. This is showing you the profit ratio of every spent coin that belongs in the short-term holder supply group. Short-term holders that are still holding on to their Bitcoin don't appear on this line. It's only those who choose to spend them. When you see values being printed below this black line, it means that coins are being spent by short-term holders in loss. What we look for on this chart is for profit to get back into the positive after a period of losses being realized, and for support to be found at the break-even cost basis line here. In the summer, during the sell-off, short-term holders spent quite a bit of time underwater, and once they were able to get back into profit, you can see for a period of time here, anytime they were back near their cost basis, coins in loss stopped moving, and enough buyers stepped in to push the price back up. Markets can kind of chop around for a while. Here at the end of September, they spent another few days realizing some losses. But over here, the reason I wanted to look at this, when we zoom in closer, is that short-term holder spent profit ratio recently got a key support bounce here at their cost basis on October 23rd, when we were all concerned that price was going to fall back below 60K. And perhaps it still does. But in the near term, these short-term holders stopped realizing loss and stepped in to buy here. They saw value and they wanted the trend to reverse. This is encouraging for short-term price action. You can see this value does bounce around a lot week to week. But right now, seeing this catch support here at this critical juncture for the price just after an all-time high break, seeing them step in here, unwilling to realize losses, coins not being spent in loss, and instead being bought back up. Here's our spent volume age bands showing coins 6 months or older that are being spent each day. We look at this to understand how much older coin volume is being realized on chain, to understand if older hands are beginning to come to life. There's been a notable spike in 6 to 12 month coins being spent here. These are mostly 6 to 12 month coins on this day, on the 24th, yesterday, taking up over 14% of the day's volume on chain. These are coins from October 24th of last year to April 24th of this year. Some of these people are concerned that the market does not have strength and they want to realize some profit before they lose any more gains. That is fine. What we don't want is to see a mass exodus of this nature with sustained output of older coins. Seeing a spike here, a big spike, is something to point out. 15% of daily volume being spent by older hands is not insignificant. Normally they're down here in the single digits. So we see a few coins on the move. Price didn't roll over as a result of this. It's not an immediate red flag, but this kind of trend could provide headwinds for price if we don't see enough demand stepping in at the same time. We'll keep an eye on this spent volume age bands in the next few days and see if we get more spikes like this. Here's average coin dormancy. This is the average age per unit of BTC moving each day. So every coin that is spent, what is the average age of all those coins per unit of BTC? There has been an increase recently of coin dormancy. This is in line with the spent volume age bands here. An increase in older coins, a steady ramping increase over a period of days aligns with a ramping increase in coin dormancy. This is not about profit taking. This is simply the age of BTC moving each day. This level is not dissimilar to this level in late 2020, just before we broke the previous all-time high. So we're still on the quieter side of coin dormancy. This area up here is where we were when we broke the all-time high. This moment in price, where my cursor is where we hung around under 19K in November before finally breaking out and creating new highs. This was the age, the average age of BTC being sold each day was up here. So we're still not back at these levels. We're still quieter, but there's been a slight increase that matches with this spent volume output here. Worth monitoring. This is the trend we're seeing. Here's our long-term holder dashboard. On the 21st, we noted that their accumulation was softening. It was still net positive, but the trend was softening, and I expected it to continue to soften as we made newer highs. I still have that expectation, but it is curious that long-term holders saw a bit of distribution, and then in the last couple of days have gained a bit more supply. Look, it's ticking back up. Short-term holders, over here, the converse of this group, they absorbed a bit of the supply that was being distributed, and they've now given some back. There's like a seesawing going on between these two groups here that says maybe they're just not ready to dump completely. As price was going up in the summer, there were a couple of smaller events where long-term holders distributed a little bit, and this kind of looks like those. We'll see. I'm not getting ahead of myself here. I'm not trying to say that they won't have any selling. This group always sells when we make new highs. But right now, they're holding kind of strong. They haven't just blindly hit the sell button because we made a new price. This group is smart. This is the smart money. They know that there's much more to go in this market, and they're remaining patient. We look down here at this SOPR, this is the spent profit ratio of long-term holders. Earlier, we looked at this chart, which was the spent profit ratio of short-term holders. We noted that they had spent some coins nearly to a loss, but losses ceased to be realized. Buyers stepped in and pushed their profit ratio back into the positive. This was important for us. Over here, likewise, the long-term holder spent profit ratio has stayed kind of quiet. That you could make an argument that it's maybe increasing slightly from where it was in late September. Zoom in. Slight growth, higher lows, but still quiet. And really this level matches this level over here when we were trying to break out of the all-time high in December. This is the consolidation at 19K before breaking out, and this blue line underneath is the spent profit ratio of long-term holders, right on par. Here is our long-term holder profit and loss ratio. A few videos ago, we went through this chart and how to interpret it, and I'll leave a link in the description below for you to deep dive into that after this video. Essentially, this orange line is representing the standing P&L ratio of every coin held by long-term holders. Lower values mean lower profit levels, and long-term holders historically are in accumulation mode during these times. And you can see they match up with bear periods. When new prices are made, long-term holder profit ratio increases very fast. They go from having 90% of their supply in profit to 95% of their supply in profit to 99% of their supply in profit to 100%. When new prices are made, when new highs are made, for a moment in time, 99 to 100% of all long-term holders are in profit. And that's how we get these dramatic spikes up in their profit and loss ratio. What we had noted was that there tended to be a topping point for this value near this upper black line, and that when long-term holder profit ratio got to this level, they typically began distributing, which also coincides with the break of the previous all-time high. This is just another way to visualize when they're in profit-taking mode versus accumulation mode. What I've noted over here on the right, in most recent times, long-term holder profitability increased very fast as we made new highs. See that? See how quickly it can ramp up in a matter of a day or two? But it didn't quite reach the top. Didn't quite reach this point where we say, okay, they're in distribution mode, they're in sell mode. This is where we look for them to take profit. They didn't quite reach this level. And in just this brief pullback, their profitability again fell back down into this, what we'll call safe area where they're less likely to sell. If we continue seeing price strength as we've been seeing today, and maybe we create new highs in the next day or two, this will spike back up again as their profitability reaches maximum saturation. But for now, they haven't yet reached the trigger on this chart that suggests they've crossed the threshold into profit-taking zone based on their historical tendency to do so. So that's all I wanted to say about this chart. I was asked on Twitter to give an update about that, and I promised I would. Right now, the chain is very quiet. We saw long-term holders sell a small amount of their coins as we broke the all-time high, but nothing to say they're in full distribution yet. Likewise, short-term holders stepped in to cease realizing losses and bid the price back up. The futures market has seen very high volumes, and a few liquidations have been driving price up and down in the last few days. That will continue to be a factor going into the future, especially in a low spot demand environment like we have right now. Retail hasn't shown up yet. Bitcoin made an all-time high, and the chain is as quiet as it has ever been. There's been a bit of profit taking by senior holders, but the majority of Bitcoiners at this point seem content to sit on their hands. If this starts unraveling over the next couple of days, we might put out a video sooner than expected to give you an update. But right now, there isn't much more to look at on-chain because we're in a bit of a holding pattern, waiting for support to be gathered around 60,000. Price remains vulnerable to a surprise large seller. However, I don't expect that scenario to happen based on what the holders have been doing all year, which is patiently waiting for higher prices. Make sure you follow me on Twitter at TXMCTrades. That's where you'll find out about all my content and analysis that doesn't end up here on these videos. Leave your questions and feedback in the comments below. I'll be sure to read them as always. And we'll put out another video later this week updating you on the market. Eventually, I'd like to be able to make videos more frequently, but as I get this channel off the ground, I'm still working a regular job and haven't been able to put out as many videos as I'd like. But we'll keep grinding away, and we'll keep updating you on the market. And who knows, maybe there's a future where I can do this full time. Stay strong, friends. We just made an all-time high, and these kinds of breaks have a history of being messy. Don't give in to fear and doubt. As always, this is not financial advice. I encourage you to do your own research, but I hope that this channel is one of your more trusted sources. All right, I'll let you guys go. I'd like to keep this video on the shorter side today. We'll speak again in a few days. Take care of yourselves, friends. Cheers.